What if I told you that your dog could be a tax deduction? Not as a pet, not as a cute little companion, but as a legitimate IRS approved business expense. I know that sounds wild, but stay with me because depending on how you use your dog in your business, this is 100% legal. And most freelancers, gig workers, and small business owners have no idea this is even possible. I'm Paulette Foster with PRF Tax Service, and today I'm breaking down exactly when and how you can deduct your dog, guard dog, therapy animal, or content creator, all of it. Let's get into it. Let's start with the most straightforward one, the guard dog. If you run a business out of your home, a warehouse, a storefront, or any physical location, and you have a dog that actively protects that space, that dog may qualify as a business expense. Here's what the IRS looks at. Number one, the dog has to actually serve a protective function. A golden retriever that greets everyone at the door is not a guard dog for tax purposes. We're talking about a dog that is trained to protect, that deters theft, that secures your business property. Number two, the breed matters, but it's not everything. German Shepherds, Rottweilers, Dobermans, these are commonly accepted. But what really matters is documented training and purpose. Number three, you need to keep records. Vet bills, training costs, food, supplies, all of it can be deductible if the dog is primarily used for business protection. Now, here's the catch. If the dog is also your family pet, you have to prorate the deduction. You can only deduct the business use percentage. So if the dog lives at your home office and protects your business space 60% of the time, you deduct 60% of the expenses. This is not a gray area if done correctly. There are actual court cases where the IRS has upheld guard dog deductions when the taxpayer had proper documentation. The key words: proper documentation. Keep your receipts. Keep records of the dog's role in your business. That is what protects you if you ever get audited. Now let's talk about the therapy animal. And this one is a little more nuanced, but still very real. If you are self employed and you have a documented medical need for an emotional support animal or a therapy animal, and that animal helps you perform your work, a portion of those costs may be deductible as a medical expense. Medical expenses are deductible on Schedule A if they exceed 7.5% of your adjusted gross income. So this isn't a dollar for dollar write off, but it can add up, especially if you have significant vet bills or training costs. What you need: a letter from a licensed mental health professional or physician documenting your need for the animal, evidence that the animal is necessary for you to function in your work, and receipts for all related expenses. This is different from the guard dog scenario. We're not talking about a business deduction on Schedule C, we're talking about a medical deduction on Schedule A. But here's where it gets interesting for content creators and freelancers. If your therapy animal also appears in your content, you may be able to split the deduction between medical and business. More on that in just a second. Again, documentation is everything. You cannot just say your dog makes you feel better. You need a paper trail. Now, this is the one that surprises people the most: the content creator deduction. If your dog appears regularly in your content, your YouTube videos, your TikToks, your Instagram reels, and that content generates income for your business, your dog's expenses may be partially deductible as a business expense. Think about it this way: if you hired an actor to appear in your videos, you would deduct that cost. Your dog is essentially a recurring cast member. Now, the IRS is not going to just take your word for it. Here's what you need to show. Number one, the dog must appear in income producing content. If your channel makes money and your dog is regularly featured, that establishes business purpose. Number two, you need to track which expenses are business related. Food and basic care are harder to deduct because the dog needs those regardless. But grooming for a shoot, props, training for content purposes, vet visits related to the dog's appearance on camera, those are stronger deductions. Number three, keep records of every video the dog appears in. Screenshot it, log it. Create a simple document that shows your dog's role in your content business. The deduction is proportional. If your dog appears in 40% of your content, you may be able to deduct 40% of certain expenses. This is not something you want to DIY without talking to a tax professional because the line between personal pet and business asset needs to be clearly documented. But it is absolutely legal and it is absolutely something real business owners do. Now, let me be real with you for a second because I don't want you to hear this video and go claim your dog just because you love them. You cannot deduct a pet just for being a pet. Full stop. You cannot deduct a dog that occasionally wanders into your home office background on a Zoom call. You cannot deduct grooming, food, or vet bills just because you work from home. The IRS requires ordinary and necessary business expenses. Your dog has to have a clear, documented, provable business purpose. If you overclaim this and get audited without documentation, you will owe back taxes, penalties, and interest. That is not worth it. Do this right or don't do it at all. Now, if you're watching this and thinking, okay, Paulette, what other deductions am I missing? I've got you. I put together a free tax savings checklist that covers the most commonly missed deductions for freelancers, gig workers, and small business owners. It's free, it takes 30 seconds to grab, and it might save you hundreds or even thousands of dollars this year. The link is in the description. Go grab it right now. I'm Paulette Foster with PRF Tax Service. New videos every Tuesday and Thursday. Subscribe so you don't miss the next one, and I'll see you then.